Well, thank you very much for joining us today. I'm joined here on stage by Stéphane Gontier. Stéphane is the CEO for Cash Services at Garda, so he probably sees more cash than anybody else I've ever met in my life. Prior to that, he had executive roles at Dollarama and at Circle K, Couche-Tard. So he's been an executive in the retail business for most of his career. And we are joined virtually by Diane Brizois, who has been running the Retail Council of Canada for as long as I've been writing at the Globe and Mail, which is back to 1995, an era, if you can remember it, where the internet was just being launched. And our final panelist, coming to us from Cornell University, is Eswar Prasad. And Eswar hasn't written the book on the future of money. He's written 3 books on the future of money. He's an expert in the field. In addition to being an economics professor at Cornell, he is also a fellow of the Brookings Institute. So thank you everybody for joining us today. I'm really looking forward to a fascinating discussion on a subject that I think is really important to all of us as we look to Canada and the global economic future. Stéphane, I'm going to start here with you up on stage. We're seeing banks and retailers, especially during the pandemic, they've changed their approach to cash management. And from your chair, you're able to see trends globally that are probably going to roll into Canada over time. Do you want to just talk a little bit about what you're seeing in terms of the financial system and in terms of retailers, into how they're looking at cash management and the kind of innovation, the kind of trends that we're going to be seeing in Canada in the near future?
Yeah, sure, Andrew. I mean, we've been seeing this for quite a while now. I mean, I would say that COVID-19 probably propelled some of these trends. But it started many years ago where bank, started to outsource the cash processing. And now what's been happening over the past couple of years is the outsourcing of the overall cash ecosystem. Because as far as banks, retailers, or consumer businesses are concerned, that's what it is. It's a supply chain. It's a cash ecosystem. There's, a lot of activities that are related to cash, starting from forecasting, reconciliation, reporting, AML reporting, and then the transportation, the processing, making the cash bank ready for, clearing the cash back with central banks. And there's been an acceleration, I would say, in the Canadian market, to take this example, as a result of this, the Canadian banking industry being more integrated than in the US, for example, where similar trends are happening, but at a slower pace. And what it means is basically the bank are looking at this, the bank are competing with fintech, right? They've been, and therefore they need to become more agile and they need more strategic optionality. And the way to do it is to become more liquid, which means not liquid so much in terms of cash, but liquid in terms of agility, to compete and focusing on what now are core activities. Cash is not core anymore to banks. It doesn't make cash irrelevant. It just we just need to make cash more effective. So the objective of the retailer and the banks are truly to make this method of payment more effective. It's already significantly less expensive than debit card, credit cards, or any other mobile method of payment. But it's still fairly labor intensive, which is why there's been an acceleration during COVID in a more tight labor market. I mean, you really want for the banks to become tellerless and cashless, and for the retailer to become, tellerless as far as cash is concerned. You don't want cash to be handled in the same fashion. And
I'm going to now move virtually to our 2 panelists. And I think what we thought we'd do off the front, and Stéphane, I'm sorry about this. This is a live performance, and I've forgotten myself a bit. But I'm going to ask Diane and Eswar to just briefly give us a minute or two, a couple of minutes of perspective on the whole issue of the future of money. And Diane, why don't we start with you? And then, Eswar, we'll move over to you. So, Diane, just your quick perspective on the whole topic we're considering today.
Well, I wished I had a definite position on the future of money, specifically the future of cash. Obviously, it's a discussion that's taking place within the retail environment in Canada. We're watching very closely some of the developments. And in fact, Dr. Prasad and I were chatting about this just before the panel about what's happening in India, in China, in Sweden. If you were to ask me now, we believe that we will be in a cashless society anytime soon. The general opinion in the retail sector, including larger retailers, is that won't happen anytime soon. Obviously, we have seen a huge change in consumer habits, a huge increase in digital payments since the beginning of the pandemic, and it doesn't seem to have changed as we get out of restrictions and go back to a semi-normal life. So we've seen an increase in tap, in the use of debit and credit cards, and obviously a huge increase in online payment. But cash still plays a very big role. And as you all know, the DNA of retailers is in fact to ensure that consumers can use whichever type of payment they prefer. And then there's the question that has not been answered yet. And we know that obviously there are many pilots in different regions of the world, but it is to ensure that we can still serve remote and marginalized communities, those that often are referred to as limited in their banking services or unbanked. And so to ensure that they're not left out of being able to pay for goods and services. So that is one of the greatest challenges. And as noted earlier, and I think we'll be talking about later on, is the cost associated with going to a cashless society from a merchant perspective. So I'm not sure I answered your question as you wanted it, but wanted to give you a bit of an overview of what's on our mind at Retail Council of Canada and that of retailers when we talk about cash and the evolution of payments.
No, thank you, Diane. That does help frame the discussion. So, Eswar, could you just pick up on that and give us sort of a general framework for how you're thinking about the future of money? Again, as an individual who's written extensively on the topic.
So in my previous book, Andrew, I did speak about the origin of paper currency in China in the 7th century. In my latest book, I argue that in fact we might be nearing the end of the era of cash. And the reason is that digital payments, both provided by the private sector and possibly in the form of central bank digital currencies, are going to provide a great deal of convenience for consumers and businesses that will organically lead to the disappearance of cash. And we're already beginning to see it happen in many countries around the world, from advanced economies such as Sweden to developing countries such as China and India. Now, the cost is certainly a crucial issue. In Canada and, of course, in the US, you have credit cards having very high interchange fees, and it doesn't make sense from a cost perspective for many merchants to go entirely digital. But we are beginning to see the future in emerging markets such as China that are clearly leapfrogging some of the advanced economies. In China, you can certainly give alms to a beggar, and you can conduct the most basic of transactions, buying a couple of dumplings on a street in Beijing, because the private sector has innovated to a point where you can do micro-transactions without the use of cash. So virtually nobody in my circle in China uses cash anymore. I seem to be the only one who has yuan notes in my billfold when I travel to China, which of course last happened a couple of years ago. I still tip my Uber drivers in cash because certainly cash creates a personal connection, and the tangible element of cash, especially when you have a communications breakdown or an electricity breakdown, might seem to be very advantageous. But I think by and large, the convenience, the fact that businesses don't have to deal with concerns about theft, loss of cash, handling cash, those I think are going to win out over the long term. Although in certain countries where the entrenched payment systems are going to make it harder for the change to take place, it's going to take a bit longer, but change is coming.
So maybe, Andrew, if I can, I mean, there's two or three things. The first one is that, let's look at online and traditional retail. I mean, to your point, I mean, consumers are looking for a connection. So yes, online is more convenient, but, traditional retail will never disappear. There will always be shops. They will always have an interaction. And by the way, cash usage and cash volume in Canada is back to 80% of what the volume was because we're processing the vast majority of the banks in this country, and 85 of what it was pre-COVID in February of 19. And as the season picks up, it's been 2 years since the Canadian had a real season. This year, you're going to see cash going up, and we predict it to be very close to what the pre-COVID level. So we don't see COVID. We see COVID as being disruptive, but more as a blip as far as cash usage is concerned. And actually, online sales are down and below the numbers of last year as consumers are going back in the stores. And people are living in a society. They're not working behind a desk and shopping, 24/7. I mean, we're living, all of us, in a society, and the trade, the shopping, is at the center of all these activities worldwide, right? I mean, that was at the basis of the economy. Now, obviously, an economy like China and India that are more controlled, where there's a desire to control the day-to-day life. I mean, the trends are very different than the trends you would have in North America, where, the values to start with are very different in terms and there's not as much control, desire to control as much from the part of the central governments. That being said, any governments, being China, being India, are working within an ecosystem. And that ecosystem is a banking ecosystem. And the central banks are never going to bank directly with consumers. They're banking banks. And therefore, the banks are important stakeholders, and this remain a business. The business of the methods of payments. It's a business to process cash. Central bank historically have been keeping the cash, the cost of cash fairly low. It's much lower, including loss and thefts, than the fees that is being paid by the merchant on credit cards. And on mobile, that goes up to 5% in North America, right? It's also pretty much in line with what we see in Europe. So, and what's going on, there's no doubt that digital is going to pick up. And at some point in time will be probably as competitive as credit card, but it's going to take on credit cards and not so much cash. And because, we're now at, really at a level where, if you're online, you're using credit cards, you're not using cash, right? I mean, that's what this is. So therefore, I mean, we're really at a point where cash you're facing a hardcore situation, right? And it's not been changing significantly over the past few years. I would say even over the past 5 years in those countries. Now, you have exceptions, and I'm not saying digital would pick up for sure, but there are exceptions. We're talking about Sweden, for example. But the reason why essentially people are using cash in countries like the US and Canada, it's because of the unbanked and the underbanked. And technology is not going to eliminate poverty. And digital money is not going to eliminate those regulations that are in place to manage a banking system. People still need to have some type of account that will be regulated by the governments, by central banks. That means fees. And the reason why people are unbanked and underbanked is because of their lack of income to start with.
And Diane, you were talking a moment ago about the unbanked, and if I can plug my own publication for a moment, the Globe and Mail ran a long essay in this weekend's paper talking about the fact there's probably 1 million Canadians who simply don't have access to credit cards or debit cards of any type. They don't have a bank account. Another 5 million Canadians who are basically, they don't have the income that will allow them to have credit cards. So when we think about cash, is it essential then to social equality, to economic equality, that the cash society continues to exist for individuals who live in that cash society, don't have the means?
Well, certainly, you talked about some pretty big numbers, considering that we're about 36 million people in Canada. So that's a big chunk of the population that is still using cash or needs cash to make any type of transaction. And so we're talking about the poor, we're talking about elderly, we're talking about marginalized society. I'm not sure I agree with everything that Stefan said about cash in Canada and the fact that it's increased during the pandemic. I'm not arguing that, but I think that there's been a lot of hoarding of cash. So we're seeing that cash flow back in the market. But certainly when we're looking at the transaction trends in retail, we're seeing a huge increase in tap, in online purchases, and just credit and debit generally versus cash. That's not to say that cash doesn't continue. However, saying that, I don't think you will. I think retailers will see cash as the great equalizer until such time as there is a system, a national system in place that allows those who currently just use cash to use another method of payment, be it by providing people with mobile phones, with credit cards, and so that doesn't happen overnight. I suspect that the number of people using cash will obviously decrease over time as access to technology becomes cheaper, where we also increase education and you have comfort. But there's another area that we're watching closely, which is the area of privacy. There's a heightened sensitivity around privacy, especially with those groups that we just discussed. So there's a lot of education. There's a lot of work that needs to be done before we in Canada would see a cashless society. So at this point in time, cash, in fact, is the equalizer when we look at these marginalized groups.
Espoir, can I get you to finish up then just on this idea of what the benefits to the unbanked might be? In your book, The Future of Money, you put forward a thesis that the unbanked may well benefit from a movement away from cash. Do you want to just talk a little bit about what your research has shown?
Yeah, this is a critical issue. I think both of the other panelists have correctly pointed out that we do need to think about the economically marginalized. Even in the US, by some estimates, about 5% of the adult population is unbanked and underbanked. If you look around the world, especially in developing countries, those proportions are higher. I think the right objective here should be, how do we provide a low-cost, easily accessible and convenient payment system, whether that be digital or, as in the current form, cash. The reality is that in countries like the US and Canada, the incumbents have been very effective at blocking competition in terms of new payment providers. In China, the government basically left a void. It was not about control. It basically allowed the private payment providers to flourish, and they innovated and scaled up to the point where they can provide these payment services in very easily accessible forms without access to a bank account. So in the US, you can use Apple Pay on your phone, but you need access to a credit card or a bank account that you can link that to. In China, all you need is a mobile phone number. So it's really become very widely accessible. I think the India model, actually, which is again not at all about government control, is a far more interesting example, because what the Indian government has provided is a payment infrastructure where it is provided on top of which private payment providers can innovate. So this way, the government is not trying to compete with the private sector. It provides the architecture, but then both existing players and new entrants who might be much smaller are on a level playing field, and you have interoperability across different payment systems, and you have private sector innovation that makes low-cost digital payments easily accessible. And I've seen the benefits again, if you think about street vendors who had to deal with cash and don't have to do so anymore, because again, it is cost efficient for them to use this. It becomes a lot easier. Now, central bank digital currencies, I think, provide a path forward. Even if you do not have a private payment provider, central bank digital currencies might be the way that you get very easy access to these low-cost digital payment systems. And many developing countries, including the Bahamas, which has rolled out the first CBDC nationwide, views this as a path to financial inclusion, because the government can essentially provide accounts that not only give easy access to low-cost digital payments without having to maintain large balances, but it also turns into a portal for basic banking products and services. So I think the path has been shown by technology, and we will move there, but again, at different paces in different countries.
And let me just jump in, because I think Espoir made an important comment when he talked about providing that ecosystem, that platform. One of the big concerns, I think this is what might slow things down in Canada, and I think Stefan commented on that earlier about the cost of accepting payments in Canada and in the US compared to, let's say, the EU when it comes to credit cards and debit cards, is of great concern and may very well slow down the movement towards cashless. Unless one of the biggest concerns from retailers is the lack of competition. So that, and the costs associated with these new payment methods. If one can find a solution to that in North America, I believe that retailers will push forward faster. But as in the introductory remarks, talked about a lot of the small retailers who saw their cost of operating go up because people were not paying with cash but paying with debit and credit. That's a reality. And if there's we need to ensure that there's a lot of innovation, but most importantly, a lot of competition, because retailers will push back if in fact all they see is their cost going up versus going down.
Well, let's talk for a minute. Stefan, I'm going to shift it back to you. We'll talk for a minute about innovation in cash management, because one of the subjects that you've worked on at Garda World is this idea of cash automation, of basically making the cash process much simpler, much less effective cash management, and obviously much safer. That's a key part of what you do. Can you just talk about where cash automation is going to go?
I mean, that's one of the benefits of technology. I mean, obviously you have to look at the cash ecosystem as a supply chain, and therefore the objective is to eliminate the number of times you touch the money, the number of times that you execute on the same task. You optimize basically the supply chain. So cash automation basically is an extension of the bank network through smart interactive kiosk or smart safe within the four walls of retail outlets. I mean, that's been propelled obviously with, again, the shortages in terms of labor, and also a desire to stop to touch or interact with the money. It's basically a combination, and you eliminate basically most of the labor touching cash. So the bank is not required to receive deposits with tellers. I mean, and the retailer do not need to invest any labor to manage cash. Cash is being automatically managed. I mean, as money goes into the safe, it becomes bank money. The retailer get immediately the credit for that money, and we go on a regular basis picking up that money, confirming that the money that is now bank money is exactly the money that was dropped inside the safe in question, and this is lowering the overall cost, because even if the cost of cash is lower than debit and credit, by eliminating totally the labor, then it becomes a matter of 10 to 15 bips. Compared to 49, 50 bips for debit, now 2% of the transaction, sometimes more with the loyalty programs with credit cards, and again it goes up to 5% with mobile methods of payment. So that's what we're doing as an industry. I mean, we're basically, and that's a very strong trend, and the banks are pushing the retailers in that direction.
Well, Diane, I'd love to get the retailer's perspective. I have to say, on my drive in this morning, I stopped at a Starbucks. Normally that's a $4 cash payment. Now I have to use my credit card. Starbucks, a lot of retailers are very high volume, very thin profit margin. And Stefan just indicated, the cost of the credit card and the cost of the debit card is much higher. How are retailers reacting to a shift away from cash? What is it? Is the cost being passed on to consumers? Are we seeing margin compression? How's that all playing out?
We're seeing many of that, but, obviously, being the CEO of Retail Council, you would assume that I would say that, using cash versus a more expensive debit or credit card payment would be best. However, for large grocers, pharmacies, for Starbucks, and you look at fast food as well, there are advantages of being able to tap or use a digital payment method. There are cost savings in other areas. It's a question of, how quickly can you process the transaction, for example. The less exchange, so exchange of cash, giving change, errors, human errors. So I'm certainly not sitting here and saying that it is a lot more expensive to use one method versus the other. I will say, though, it depends on the retailer. And so we've seen, I think you've noticed in Canada that you're going into some very large mass merchants, grocery stores, and pharmacies where everything is automated. There's in fact only one cash and about 10 checkouts that are all done self-checkout. And they're not obviously set up for cash. They're set up for digital payments or credit card, debit card payments. And so there are advantages. So there are ways the retailers are absorbing the additional cost of taking or accepting credit cards and debit cards or digital payments versus cash by saving on labor and the like. So, but saying that, it is still, for many of the retailers, a huge challenge. As Stéphane said, with many of the cards, even though the government in Canada has set a bar on the average rate, we've seen consumer habits change substantially. And because of the way or how they pay, many of our retailers have seen their acceptance costs increase substantially. So yes, at the end of the day, for those retailers, it's had an impact on their margins. And there's so much you can absorb, and eventually you do have to reflect that in the price of goods sold.
Yep.
So there is an impact on most retailers, but I certainly cannot say that at times there isn't an advantage because of speed, ease of purchase in the store. So it really depends on the type of retailer and the type of transaction.
Eswar, I'm going to shift the attention back to you and pick up on something you started to talk about a moment ago, which is the role of central banks in the future of money. I would have thought coming into this session that the consumer or the retailers, the big retailers, the Walmarts of this world would be the leaders that would actually dictate where we go. But in your book, In the Future of Money, you suggest that central banks are eventually going to drive the trend towards either not a cashless society, but far less cash in society. You talked about that again a moment ago. Can you talk a little bit more about where you think the central banks want to take things?
So I should first react to comments by Diane and Stéphane, and I agree with them that the situation, although they didn't quite say this, that the situation in North America is absurd, where the interchange fees on credit cards can run up to 5%. And I think in our part of the world, the incumbents have been very, very clever and persuasive at blocking competition. If China, India, Kenya, Sweden, many other countries can provide very low-cost digital payments, why on earth are we paying such high interchange fees here? And there are two answers to that. One is that these incumbents have used their clout very effectively in the political sphere to block new entrants. And second, quite frankly, they bribe us. When you go in to pay for your Starbucks coffee, Andrew, with your credit card, you're getting miles or hotel points or something of the sort. So the credit card companies have very effectively co-opted you and me into using their methods of payment to the disadvantage of retailers and thwarting a move towards a more efficient retail payment system. But here too, I think change is coming. The technology is there. I think it's just that we need the ability for new entrants to come in. Now, central banks have recognized that the reality that the use of their money at the retail level is going to shrink over time. And even in a country like the US, whereas Stéphane pointed out happened in Canada, you do have a slight uptick in cash being held, but not cash being used for transaction purposes. Diane correctly pointed out that there does seem to be some hoarding of cash going on right now. So in addition to financial inclusion, I think central banks are also thinking about issuing CBDCs as a way of providing a backstop to a private payments infrastructure. So the Swedish central bank, the Riksbank, is pondering an e-kroner, not because the private payments infrastructure is not working well, but the Riksbank, I think, wisely feels that leaving the entire payments infrastructure in the hands of the private sector could leave it open to technological and confidence vulnerabilities. In a country like China, certainly the government is a little concerned that the two key payment providers, WeChat Pay and AliChat Pay, are doing a great job of providing digital payments that everybody has access to, but they now control the payments market. They're not allowing a new entrants in very easily, and they control a lot of data. So at least on that point, certainly, a CBDC might open up the competition, sort of like India is doing. But as Diane pointed out, privacy is going to be a key issue, whether we want to live in a world where either a private payment provider or the central bank knows about every one of our transactions. That's a discussion we need to have, not just as an economic or technocratic matter, but at the level of society.
Don't you think it goes back? It goes back to a system of governments, right? I mean, in the EU there is regulation of credit card fees, right? I mean, it most likely won't happen in North America. I mean, there's some, but not to the same extent, right? There's not. I mean, on this continent, it's more about the invisible end and providing systems and have the private sector taking over, and it becomes very unpredictable versus other continents where it's more centralized, it's more being managed or directed by, and that influence, it makes it more or less predictable. And then it's a matter of, again, of consumers at the end. I mean, we're talking, it's banks, businesses, but consumers. And we're back to the unbanked and the underbanked. I mean, the example in Sweden is not an example that would apply to Canada and the US. Very different. I mean, it's 9% of the transaction now are being cash transaction. So they're instead of 30% like in the Canadian market. But, they don't have like the US 25% of their population without a credit card. They don't have 20% of underbanked, I'm sorry, and 10% of unbanked. And at the end, they need to have an access. You need a government or you need a central bank, providing with the environment, the right, environment so that people have what's required to transact with a digital mean of payment. And I don't think that this is something we're going to see anytime soon. We will see central banks. They're all made announcements about, launching a digital currency, but it takes more than a digital currency. It takes the ecosystem that comes with it. And it means bringing on board all the stakeholders of that, specific economy.
Eswar, one of the arguments I've heard for the continuing social relevance of cash is that it serves as a backstop against a failure in our electronic finance system. That holding cash means that we've got a safety net in case of hacking or in case of some sort of catastrophic technology failure. Do you just want to talk about that concept? Is that something that you've done research on in the past, and to what role cash can play as a social safety net?
Certainly, Andrew. Like I said, I still carry dollar bills in my wallet and tip my baristas and my Uber drivers with cash, because that tangible personal connection that cash creates is hard to replicate with just a swipe of your phone. But cash has other advantages, as both you and Dan have alluded to, in the case of telecommunications breakdown or a breakdown of the electricity grid. Certainly cash is going to become much more viable. In my book, I have examples of the survivalist community in the US that use cash as the right preparation for whenever apocalypse comes. But I think the broader point really is that cash is an instrument that is very easily accessible, no matter your literacy level, your income level, whether you're in an area that has no access to easy forms of digital communication and so on. But here again, I think the question is whether these advantages of cash, and of course, I forgot to mention privacy, which we discussed a bit earlier, which is probably the biggest advantage. But these need to be set against the potential advantages of CBDC. As Stefan correctly pointed out, it's fine to talk about technology providing access to digital payment systems, but the private sector might not provide it in many countries, either developing or developed. And I think a CBDC can provide that pathway to broader inclusion, to giving easy access, even if you're unbanked or underbanked and don't have money to put into a bank account balance, to have access to a low-cost digital payment system. But cash has certain merits that I think are going to keep it viable, at least in some of these economies which still issue the world's major reserve currencies, including the US dollar and the Canadian dollar, at least for the foreseeable future, by which I mean the next decade to two. But the reality is that central bank digital currencies are coming. Like I said, the Bahamas has already rolled out its CBDC nationwide. Japan, Sweden, and China have already started experiments. Many other countries are going to roll out experiments later this year or early next year. None of these central banks talks about displacing cash with CBDC. But I think what is going to happen is that organically, the use of cash will decline. But of course, if it turns out that people really want cash, prefer to use that relative to CBDC, it's going to persist. But my prediction is that for both consumers and businesses, the advantages of digital forms of payment, especially CBDCs, is going to win out in the not too distant future.
The government mindset on a digital versus a cash society, I think of my own life, and the times I've reached into my wallet in recent months have been to pay individuals who are providing services where perhaps they're not paying tax. I pay someone cash to walk my dog. I occasionally pay cash for someone to help clean my house. Do you think then government figures would be in a position to try and get at that cash society where tax avoidance is part of the strategy for using cash? Does that just follow?
Certainly, that's going to be a big benefit. If you think about the government's point of view on this, reducing the use of cash and moving to digital forms of payment, all of which ultimately leave a digital trace, whether it's a private payment system or a CBDC, that's going to bring a lot of economic activity out of the shadows and into the tax net. Now, the government might consider that a good thing because it's going to broaden the tax base. Others might consider it giving it a lot more power to the government. In addition, cash does help in fueling illicit activities, at least petty corruption. So certainly anything that leaves a digital trace is going to deter corruption. It's certainly not going to solve the corruption problem by itself. I mean, most corruption takes much more sophisticated forms. But at the margin, reducing cash can have some of these other benefits. In addition, I'm told that the costs of producing and distributing cash are quite significant for a number of central banks around the world, especially in large developing economies. So that too is a potential benefit. But of course, one has to acknowledge that there are technological vulnerabilities out there. So one cannot say that there is a clear-cut case in favor of CBDC, even from a technological perspective. But I would point out that technology is already giving us some ways to solve some of these problems. Take the privacy issue. China is experimenting with 5 different grades of digital wallets for its CBDC. The lowest grade digital wallet would be for low value transactions, would give you a little more anonymity and privacy. The high value transactions, you would have to meet know your customer requirements. So perhaps we can find a medium that attains the government's objectives as well as consumers' desires for convenience as well as privacy.
Well, Stefan, I want to pick up on one thing that SR mentioned there, which is illicit activities. And it's in researching for this panel, I found what I thought was a pretty provocative posting on Garda World's website, which basically said, look, let's not blame cash for all the problems in the criminal world. You know, electronic fraud is actually skyrocketing. And the figure you had, which I was stunned by, was $1.4 billion in electronic fraud playing out in the global economy.
And counterfeit, for example, was I think last year $35 million in the U.S. So it's I mean, at the end of the day, I mean, there's no doubt that digital currency for me is a fait accompli. But I don't think that this is one against the other. I think that the cost of cash is going down because of the investment in technology that you're going to see more and more in those grocery stores and so on. Circle K is rolling out as we speak in Canada, that smart safe technology. Recycler to accept cash payments at the automated NCR checkout or Debo checkouts are being installed as we speak in the US. They will be rolled out in the coming years at the Loblaws and the Sobeys and the Metro and the Canadian market. So I think that, it's a matter of cash remaining relevant in a more mobile world, quite frankly. And it's a matter of cost. It's a matter of poverty. I don't think that the government is concerned about the tax not being paid on cash, but frankly, there's more money. As you know, if we're listening to the President of the United States every day, there's more money to get from other pockets, a lot more than what would be paid under the table in the U.S. and the Canadian market. I think it's a matter of poverty. It's a matter of giving access to people to a form of payment. At the end of the day, it's poverty. It's documentation as well that makes them not being able to have a bank account, and they won't be able to get any kind of other accounts that would be regulated for that matter. So it's really fundamentally the reason why cash will remain relevant. And then there's a connection. And I really don't think that fraud matters. I think that technology, by the way, is very expensive. We tend to forget about that, but it's much more expensive than printing currency for governments. Mm-hmm. I mean, I was managing businesses 30 years ago. I would never have imagined that I would be spending the tens of millions of dollars to run a business now just in technology. And the risk of cybersecurity, privacy are significant risk, and very expensive risk, because they very often become issues. So again, digital currency is a fait accompli. I don't think it's being driven or it's going to be, propelled by the fact that there's concerns about cash. I think that, the cost of cash against will have to go down further to make it still relevant. And then I don't think you can paint the world with one brush and one color. The situation is so different between Sweden, the US, or between China and Sweden or Spain. I think it's quite unpredictable. I don't think that I would predict the end of cash. I would certainly predict a higher rate of adoption of digital currency. I think it's going to come from credit cards and other methods, not necessarily from cash. And is there going to be a decline in terms of cash usage? There will be, certainly, slowly but surely, some decline. I don't think it's about to disappear.
Diane, you talked earlier about the retailer the retailer wants to give the consumer choice. So if the consumer wants to pay in cash, terrific. But we've seen examples, and just to pick randomly, like Loblaws and Shoppers, where there are digital checkouts. It's probably more efficient. They're gently nudging the consumer. Can you just talk about how retailers are thinking about shaping consumer behavior, knowing full well that they do have to ultimately give the consumer choice?
Well, let me go back and say that I agree with what Stefan was saying about cash. The retail sector is a very competitive sector. We're living in a very thin margin environment. So I think that you will continue to see, especially with those retailers who have high traffic and large numbers of transactions, you'll see more and more technology at the point of sale. But I can tell you, without a shadow of a doubt, that if consumers begin pushing back, feeling that this is not convenient, that you will see more cashiers on site. Based on my conversations with some of the large pharmacy chains, grocery chains, and mass merchants, consumers, in fact, are getting used to and enjoy using digital methods, such as those digital cashes that we see in many of the stores now. So I can't sit here and tell you this is the way all retailers will go, because retailers are extremely sensitive to how consumers behave in their store, how they want to pay, the kind of interaction they want. But there's absolutely no question that there is an unprecedented amount of investment in technology at the point of sale, and in our very large format retailers, as well as in fast food and in high traffic stores, we will see more and more cashless methods of payment, such as unmanned POS. So it is a trend based on everything we've heard. Our retailers are telling us that consumers like it, and so I do think that is something that we're going to see in more than just mass merch, grocery, pharma, or convenience stores. I think you're going to see a lot of other retailers testing and seeing how they can save, especially in the area of labor, which is where we see large increases in operating costs. So that will continue.
We've got time for one more question, and I should give a bit of background before on this. We've heard a number of times mentions of Sweden, and one of the reasons that everybody talks about Sweden is because the Swedish central banker, in a rare show of nerve, fearlessly predicted that Sweden will be cashless by 2030. Now, again, Stefan, I'm going to come to you with this first, and then any of the other panelists could jump in. But Garda World put out, again, what I thought was a very thoughtful post saying, sure, that's an interesting trend from Sweden, but in Canada, the Bank of Canada has done extensive consumer sampling. They found 74% of Canadians have no plans to be cashless within the next 5 years. So is it the Canadian consumer that just doesn't quite understand the trends, or do you think different jurisdictions are going to have different experiences as we move forward with digital currency?
I think it starts with different culture, different relationship with cash, and the way Swedes have been behaving since the Second World War. I mean, again, cash transactions are down to 9%, which is the lowest. But here's the thing: it's lowest rate of poverty as well. You know, a higher safety net for the population. So less lack of income means less underbanked, less unbanked. So you need to have the winning conditions to be able to successfully implement digital currency as the only need of payments instead of cash. And to some of the prior comments, the fees of those transactions. They've made digital currency affordable for the low-income consumers. And I don't think that's something that is going to happen in Canada and the US anytime soon.
Thank you. We are now at the end of our time. I do appreciate all the panelists. I think this has been a terrific session with a lot of look ahead as to where we are going. So I thank Eswar, I thank Diane virtually, and Stefan, thank you very much for sharing the stage today. Enjoy your conference, and thank you very much for being a part of this.